Everything changed in the last 4 hours. If you are looking at your portfolio right now and wondering why the red candles are getting longer and longer, stop what you're doing and pay attention, because the floor just fell out. We just watched Bitcoin violently reject the $70,000 level and smash straight down through support to tap $69,000. And if you think this is just a normal Tuesday pullback, you're about to get run over by the biggest liquidity trap we've seen in 6 months. The charts are screaming danger. The whales are moving massive blocks of coins to exchanges, and the average retail investor is sitting there freezing like a deer in headlights while their net worth evaporates. Welcome back to Market. With John, I'm John, and today we are not sugarcoating anything. We are looking at a potential total collapse setup that is flashing red across every single major indicator I track. We need to talk about why $70,000 was the line in the sand, why losing it triggers a algorithmic death spiral, and exactly who is pressing the sell button while you are being told to buy the dip. The mainstream financial media will tell you this is just volatility. They will tell you it is healthy consolidation. I am telling you that $80 million in long positions were liquidated in a matter of hours, and that is just the appetizer. The main course is a cascade of margin calls that could drag us down to levels you haven't thought about since the bear market lows. Smash the like button right now if you want the truth about these markets, because the algorithms are trying to suppress this information, and we need to get this warning out to as many people as possible before the next leg down begins. Let's look at exactly what just happened. Bitcoin didn't just drift down, it was pushed. We saw a massive rejection at the highs, followed by a relentless selling pressure that chewed through buy walls like they weren't even there. And when we broke 70,000, that was the psychological trigger. That was the moment every over-leveraged trader started sweating. But the real damage happened when we wicked down to 69,000. That level is critical. That is the previous cycle high. That is the holy grail of support. If that level turns into resistance, we are looking at a structural breakdown of the entire bull thesis for the short term. You have to understand the mechanics of what is happening behind the scenes. This isn't just people selling because they need cash. This is forced selling. When price drops this fast, it triggers stop losses. When stop losses get hit, they turn into market sell orders. Market sell orders drive the price down further, which hits more stop losses and triggers liquidation levels for people trading on leverage. It is a domino effect. And right now, the dominoes are falling faster than the order books can absorb. We are seeing spreads widen on Coinbase and Binance, which means liquidity is drying up. When liquidity dries up, volatility explodes. That is why you see these $1,000 candles in minutes. But here's the part that should really scare you. This move happened while the traditional stock market was relatively calm. Usually, Bitcoin acts as a high beta tech stock. It moves with the NASDAQ, but today, it led the drop. That tells me that capital is fleeing the riskiest assets first. It tells me that someone knows something that we don't. Is it a regulatory crackdown coming? Is it a massive fund blowing up? Or is it simply the smart money taking profit while the retail crowd is still euphoric about ETFs? Most people are missing this, but look at the funding rates. For weeks, funding rates have been positive. That means traders were paying a premium to be long. Everyone was betting on number go up. The market makers, the exchanges, and the whales love this setup. They know exactly where your liquidation price is. They have the data, they can see the order book, and they just engineered a flush to wipe out billions of dollars in open interest. They took your money, reset the board, and now they are deciding whether to let it drop further or pump it back up to trap the shorts. This is the game. It is a transfer of wealth from the impatient to the patient, from the uninformed to the informed. And if you are reacting emotionally right now, you are already losing. You need to detach and look at the data. The RSI on the 4-hour chart is oversold, sure, but on the weekly, we are still extended. There's plenty of room to fall. We could see 65,000, maybe even 60,000 without breaking the long-term trend. But tell me, can your portfolio handle a drop to $60,000 tomorrow? Because that is the risk level score we are dealing with right now. It is a solid 9 out of 10 on the danger scale. If you think I'm exaggerating, wait until you see this next metric. The stablecoin inflow to exchanges has stalled. Usually, before a big pump, we see billions of Tether or USDC moving onto exchanges, ready to buy. Right now, it's flat. Or worse, it's flowing out. That means there is no new money stepping in to catch this falling knife. The bid support is hollow. If the whales decide to dump another 5,000 Bitcoin, there's no wall of money to stop it until we get much, much lower. Comment crash if you see it too, because I want to know how many of you are actually watching the order flow and how many are just listening to the hype on Twitter. The sentiment has shifted instantly. Yesterday, everyone was calling for 100,000. Today, silence. That is the smell of fear. And fear is what drives markets more than greed ever could. Let's talk about the ETFs for a second, because this is the elephant in the room. Everyone thought the BlackRock and Fidelity ETFs were a magic shield against downside. They thought, oh, the institutions are here, they won't let it crash. You were wrong. The institutions are not your friends. They are here to make money on fees and volatility. If their clients want to sell, they sell. If they need to rebalance, they dump. And let's be real, if you're BlackRock, do you want to buy Bitcoin at 73,000 or do you want to buy it at 58,000? You crash the price, you shake out the weak hands, and you scoop it up cheap. It is the oldest trick in the book, and retail falls for it every single time. This part is the real bombshell. Look at the correlation with the US dollar index, the DXY. The dollar has been creeping up. When the dollar gets strong, assets get weak. It is a seesaw. The Fed is holding rates high. They are signaling that they are in no rush to cut. That keeps the dollar strong. That puts pressure on gold, on silver, and yes, on Bitcoin. This crash isn't happening in a vacuum. It is happening because macro conditions are tightening again. The liquidity faucet is being turned off. And when the water runs out, the boats that are floating the highest hit the ground the hardest. Bitcoin was floating the highest. Watch what happens next with the miners. We are post-halving now. Miner revenue has been slashed. They need high prices to stay profitable. If Bitcoin drops below a certain threshold, these mining companies start losing money every single day. What do they do then? They have to sell their reserves to pay for electricity. They have to dump their HODL stacks just to keep the lights on. That creates a secondary wave of selling pressure that has nothing to do with speculation and everything to do with survival. If we see a minor capitulation event where they start mass selling, we could slice through 60,000 like it is tissue paper. Share this video with someone holding Bitcoin right now because they need to understand that this is not the time to be a hero with leverage. This is the time to protect capital. Now, I want to pivot to the banking system because this connects directly to crypto. Remember the regional bank crisis? Remember how Bitcoin pumped when the banks failed? Well, we are seeing stress signals in the banking sector again. Commercial real estate loans are going bad. Delinquencies are up. If another bank starts to wobble, we might see a flight to safety into Bitcoin. But, and this is a huge but, in the initial panic of a banking crash, everything gets sold. Cash is king. People sell Bitcoin to cover margin calls on stocks. They sell gold to pay debts. In a liquidity crisis, correlations go to 1. Everything goes down together. So do not assume that a bank failure tomorrow means Bitcoin moons immediately. It could mean a flush to 50,000 first, and then the pump. You have to be ready for the volatility. Let's look at the charts again. I want to point out a pattern that is forming. It looks suspiciously like a Wyckoff distribution top. This is where the smart money distributes their positions to retail investors slowly, keeping the price in a range before pulling the rug. We spent weeks chopping around 70,000. That was the distribution phase. Now we are entering the markdown phase. The goal of the markdown phase is to find the true bottom where value investors will step back in. We are not there yet. The RSI is not low enough on the daily. The fear and greed index is still reading greed or neutral. We need to see extreme fear before we can confidentially say the bottom is in. Subscribe to Market with John because this story is moving fast and I will be posting updates as soon as key levels break. You do not want to be the last one to know when the trend flips. There's another angle here that exposes the fragility of the current market structure, the leverage ratio. Even after this flush, the estimated leverage ratio across exchanges is still historically high. That means people are addicted to debt. They are gambling, not investing. And the market has a way of punishing gamblers. Exchanges make money on trading fees and liquidations. They have an incentive to see volatility. Do not think for a second that the exchanges are upset about this crash. They are making a killing on the volume. You are the one taking the loss. Let's play out 3 scenarios so you can prepare yourself. Scenario 1, the bull trap. We bounce here at 69,000. We pump back up to 71,000. Everyone thinks the correction is over. They load up on longs again, and then wham! We get rejected hard and crash even lower, trapping all the new bulls. This is a classic market maker move. Do not trust the first bounce. The first bounce is usually a lie. Scenario 2, the slow bleed. We don't crash, we just grind lower. Every day, down 2%, down 3%. It's torture, it drains your hope. This is actually worse than a flash crash because it traps people who keep waiting for a reversal that never comes until they finally sell at the bottom out of exhaustion. Scenario 3, the total washout. This is the worst case scenario. We break 69,000 with volume. We smash through 65,000. We trigger a panic that sends us straight to 58,000 or even 52,000 to retest the breakout levels from earlier this year. This would be a 20 to 30% correction. In crypto, that is normal. But for the people who bought the top, it is devastating. It wipes out months of gains. Which scenario are we in? Right now, the data points to a mix of 1 and 3. We are seeing the bounce attempt, but the volume on the selling side is much stronger than the buying side. The bears are in control. The trend is your friend until it bends, and right now, the trend on the short time frame is bent and snapped. Turn on notifications because if we break 65,000, I'm going live immediately. That is a critical danger zone. But the real story isn't just Bitcoin, it's the contagion. Look at the altcoins. Ethereum is bleeding. Solana is taking a hit. The meme coins that everyone was gambling on, they are getting slaughtered. Down 20, 30% in a day. This is the risk of holding speculative assets during a correction. Bitcoin sneezes, and the altcoin market gets the flu. If Bitcoin goes into a prolonged correction, altcoins could see a 50 to 80% drawdown. That is not fear-mongering. That is historical fact. It happens every cycle. And who benefits from this? The cash holders. The people who were patient. The people who didn't FOMO in at the top. If you are sitting on cash right now, you are licking your chops. You're looking at this Red Sea and seeing opportunity. But you have to be disciplined. You don't catch a falling knife. You wait for it to hit the floor, stop bouncing, and start to settle. We are nowhere near the settling phase yet. The knife is still falling. I want to ask you a serious question. Do you have an exit strategy? Or are you just hoping? Hope is not a strategy. If you entered this trade without a stop loss, you're gambling. If you are watching your screen praying for a green candle, you have already lost control. Professional traders know their exit before they enter. They cut losses quickly. They don't marry their bags. If you are holding a bag right now that is down significant money, you have a hard decision to make. Do you hold and pray it comes back? Or do you cut it and preserve what you have left to fight another day? I can't make that decision for you, but I can tell you that capital preservation is the number one rule of this game. You can't play if you have no chips left. Let's zoom out and look at the geopolitical shocks affecting markets. We have tensions rising globally, oil spikes, supply chain issues. These things create uncertainty. Markets hate uncertainty. When uncertainty rises, risk assets get sold. Bitcoin is still treated as a risk asset by the majority of the world. It is not fully decoupled yet. So when the world gets scary, people buy dollars and bonds, not Bitcoin. Not yet. We want to believe in the digital gold narrative, and long-term I do, but short-term, the market treats it like a tech stock on steroids. Here is what you need to watch in the next 24 hours. Watch the $69,000 level. If we close a daily candle below that, it is technically confirmed bearish. Watch the volume. If we see a massive spike in volume on a down candle, that is capitulation. That might be a short-term bottom. But if we drift down on low volume, that means there are no buyers, and the price will keep sagging until it finds liquidity much lower. Also, keep an eye on the ETF flows. The data usually comes out with a lag. If we see that yesterday and today had massive outflows from the ETFs, that confirms that the institutional sentiment has shifted. If the ETFs are still buying, then this might just be a leverage flush, and we could recover quickly. That data point is the key to solving this puzzle. And don't forget the Federal Reserve. We have speakers coming up. We have data releases. Any sign that inflation is sticky or that the economy is staying too hot will give the Fed reason to keep rates high. High rates are the enemy of crypto. We need liquidity. We need cheap money. Right now, money is expensive and getting tighter. This is a wake-up call. If you have been complacent, sitting on massive gains, thinking it only goes up, you just got a reality check. The market is a beast that tries to shake you off. It is designed to take your money. You have to be smarter. You have to be faster. You have to be less emotional. Most people will click away from this video and go back to watching cat videos or baseless hype. But you're still here. That means you are serious. That means you want to survive. So here is your actionable takeaway. Review your portfolio. Check your exposure. Are you over-leveraged? Reduce it. Are you too heavy in speculative alts? Consolidate into quality. Do you have cash on the side to buy the real bottom? If not, start planning how to generate some. This dip is an opportunity, but only if you survive the crash first. We are watching a massive financial shift in real time. The easy mode of the last few months is over. We are in hard mode now. The volatility is back. The fear is back. And frankly, this is where the real money is made, not by buying the top, but by navigating the chaos of the bottom. If you found value in this update, make sure you subscribe to the channel. I'm going to be tracking this situation hour by hour. I will be looking for the whale wallets, the exchange inflows, and the liquidation maps to give you the edge you need. Smash the like button so this reaches more people. The algorithm hates panic, but the people need to know. Share this with your crypto groups. Warn your friends. The collapse to 69,000 might just be the beginning. Stay safe out there. Keep your head on a swivel. Do not let the market wreck you. This is not financial advice. I'm not a financial advisor. This is for entertainment and educational purposes only. You are responsible for your own trades. I'll see you in the next video and watch those charts because things are about to get very interesting. Wait, one last thing before I go. I'm looking at the chart right now as I speak, and another massive sell order just hit the tape. We are testing the lows again. This isn't over. Prepare yourselves. The next few hours are going to be critical. Don't blink. Boom. Catch you on the next one.